Hello viewers, I welcome you back. It's a new day and my name is Sewankambo Isma from FXKampala. In the video today, we're going to try to adjust and look at how you can draw the support and resistance. What are some of the things that you need to follow? What should you have in mind? When should you draw it? Is it on the trading market? Is it on the ranging market? How possibly and how best can we draft the support and resistance? So in the video today, I've decided to make this video a bit precise for us to master support and resistance practically and in just 5 minutes. If you haven't subscribed to this channel, please do such that you enjoy the content that we happen to release. You can also visit us onto our social and other social media platforms of ours. That is Facebook, Instagram, TikTok, LinkedIn. Just type in FXKampala. You'll find such amazing and detailed information like this. But then, since I've decided to make this video for just 5 minutes, let's go and see what support and resistance is. Support and resistance are ideally these levels in the market where particularly market will always respect them in a certain direction, or will certainly expect to experience a reversal, a consolidation along these levels. So it becomes an area of interest. That is, if that level, is tested, more than once. The more times it is tested, then it now happens to be, a support or a resistance. So if it is at around the peak or the top, if this level that is being tested is at the peak, then it happens to be a resistance. If it's at the bottom, then it comes to be the support. So we're going to see some of the principles, some of the things, the steps that one needs to follow if they literally need to draw support and resistance. Now, I'll just show you something simple here. Like for instance, as you can see on my chart, this is my this is my chart. The pair is Euro JPY. So, but the clear definition of support and resistance should be, it's a zone, should be a zone that is respected more than once, okay? And as the market approaches it, we're experiencing a consolidation that is either in the bullish direction or in the bearish direction. Like for instance, when you look at this, initially I created a video about technical analysis, and among the principles of technical analysis is that history repeats itself. So this is where particularly this principle or support and resistance come into play. What do we mean? When you look at this particular level, the market is testing these levels. It tested this, it came down. It tested this, it came down. It tested this, it came down. It tested this. Now, apparently, it's actually coming down because of this resistance. Then, if it's a support, I'm just showing you what ideally should be a support. Should a support literally be? When we come to this point, you see that this point has been tested so much. But then remember, support is not just a line. It's not just, a line or a price. Support is a zone that we can always consider as an area of interest. So if you suddenly happen to look at this, we look at this, still here, it's within support, still here, it's within support. So when you're drafting your support or your resistance level, you have to make sure that it is a zone. And when you look at all these points, they are literally like our areas of interest, just as in mathematics. So that area of interest is what may be as a support and resistance. Now, when you're drawing support and resistance, it shouldn't be that I should have both of them. You can ideally just have one, and then you start, drafting, and then aim for your trades to trade. So we have two approaches. You can either trade the break, or you can trade the bounce or the consolidation or the reversal in the market, as we're going to see. So when we are drafting support and resistance, principle number one, identify the key levels. What do we mean by key levels? Like for instance, when we come here, you're going to realize that if this is our support, this is a key level, 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 this is a key level. So before you are, all what we can consider as higher highs, okay? Or you can call them literally swing highs or swing lows in the market. So if the market is trending, we look out for the swing highs and swing lows. If the market within a range, we actually look out for the key, key highs and key lows in the market. So if for this nature, the market is actually a ranging one. So meaning that this time around, you have to always look for the highs and the lows in the market. So when you look at here, you look for them. When you identify them, make sure that you join them. Okay. So if it is a trending market, make sure you look for the and the market is trending upwards. Make sure you look for the swing lows. If the market is coming down, make sure you look for the swing highs. Join them. You see, when the market is going up, we give it a support. When the market is moving down, we give it a resistance. So when the market is within a range, we just draft and give it horizontal, and of course lines as support and our resistance. So make sure that you identify them. After identifying these key levels, connect the multiple touch points. Make sure you draw lines on them to create your support levels and resistance levels. So it may not necessarily just be a line. You can say, for instance, if I've identified this, you join them. So after joining them, the next step that you should do is that you have to justify. You have to justify. By justification, we mean that support and resistance is not just a line. It's a zone. It's a zone of interest. So I can say, yes, sir, having had this as a support level, then I can make sure that I put a zone on it such that it comes out very, very clearly. So I'm going to put, it's not just how I clearly identify this as this, okay? That is my support. And then I literally do the same thing. This is the justification, principle number 3. After I justify them, it's helping you to not leave out a few of the points there. Sometimes you may leave out points, sometimes you may not leave them. So you may leave them out just because it did not touch, you just drafted a line there. But then by adjusting, it means that now you're creating a zone, which zone may fail to leave out points that are essential, that are important for our trading. Then number 4, switch between time frames. So what you do after doing this, I've realized that generally this has helped me now to tell the general market bias. So having told the general market bias, then I'm going to expect this market to come down because it's already reached the resistance. We say trading support and resistance, we can trade it either ways. We can trade the bounce or the reversal, what you consider as the consolidation, or we may trade the break. So in case the market comes and breaks above here, usually this comes with the momentum. So if it's coming with the momentum and I've justified my levels very well. So therefore I can tell, if there is a false break, it's likely to end here because I've made my zone that big, that huge. So what I'm doing is, since for this case, I'm expecting a reversal. So by this time round, I know where market is going. Why? Because it's actually bouncing off the resistance, and therefore I'm expecting it to come down. And of course, this should be my level. This should be my level. So having done that, the last step should be monitor for breakouts and fake outs. So that's what I've just explained. So before we actually can go any further, I said the next step was to actually go in a relatively smaller time frame. It can be 4 hours, it can be 1 hour, but personally, I prefer going in for 15 minutes. Now, by this time round, I've actually identified the bias of the market, and probably I can still come back and then draft my levels, but this time round in relatively smaller time frames. I can say I have a key level there, and then still I have another temporary support and support here. This is a temporary resistance. So having identified that it's coming down, then within a resistance or a support, we can still have the intermediary trade setups there. So what I do, I will then have to wait for the market to break this intermediary resistance, and once it breaks this support, then I'll look forward selling, and of course I'll put my stop loss there and my take profit along that. that level. So with that, I think these are the steps of how a person should identify support and resistance when they are trading, depending on the market structure or the type of market they are trading. So there have been actually 3 levels. There have been 5 steps: identifying highs and lows in the market. Second was connect multiple touch points, that is drafting support and resistance lines, and then adjust 5 for clarity. This is identifying or drafting the zone there. Then fourth one was to switch between time frames, and lastly was to monitor and look out for either the breakouts or the reversals in the market. So the moment you follow this guideline, it's going to be easier for you to draft support levels, to draft resistance levels. So hope you have learned something from here. We have left our contacts in the beginning of this video. If you enjoy this content and would love to come for a mentorship or anything, don't hesitate to contact us. We'll always be in position to help you. Have a lovely day. Enjoy.